HMRC arrears become serious when they are no longer just a timing issue. One late VAT payment may be a short-term cash flow problem. A director might know exactly why it happened, when the missing cash is due in, and how the next tax date will be covered. But repeated VAT, PAYE or corporation tax arrears can signal something deeper. The question is not only how much is owed to HMRC. The better questions are, what type of tax is overdue? How old is it? Are returns up to date? Is current tax still being paid? And does the next 13 weeks of cash show a realistic way through? Start by separating the tax buckets. VAT arrears can build when customer receipts are late, margins are thin, or the business has used cash collected on sales to cover other pressure. PAYE and national insurance arrears can be especially sensitive because they often connect to payroll, staff costs, and the day-to-day ability to keep trading. Corporation tax arrears may point to historic profit, but that does not mean the cash is still available now. So do not look at HMRC as one vague number. Break it down by VAT, PAYE, national insurance, corporation tax, penalties, interest, and any arrangement already made. Then separate old arrears from current tax. Old arrears are one problem. New tax continuing to build while old arrears remain unpaid is a different kind of pressure. That is often where HMRC debt becomes a business viability warning sign. One of the clearest warning signs is a time to pay arrangement that keeps slipping. A single missed payment may have an explanation. Repeated missed promises usually damage credibility. It also makes the next conversation harder because HMRC will look at what was promised before, what was actually paid, and whether the business can keep up with current tax as well as arrears. Another warning sign is late or unclear returns. If returns are missing, the real position may be unclear. If returns are filed but the tax cannot be paid, the business needs a cash view. If estimates are being used, directors should be careful not to make decisions on numbers that are not reliable. The next warning sign is when the cash forecast only works by delaying tax again. If payroll, rent, and suppliers are only paid because VAT or PAYE is pushed back, the business may be using HMRC as the pressure valve. That can become dangerous if it keeps repeating. Directors should also pay attention to who is being paid while HMRC arrears grow. That does not mean every payment is wrong. Businesses have to make trading decisions. But if creditor pressure is rising, tax arrears are increasing, and some creditors are being preferred without a clear business reason, the decision record becomes important. The practical step is to organise the facts before the pressure escalates. List the tax type, the amount, the age of the arrears, the return status, missed or current time to pay arrangements, HMRC letters, enforcement warnings, and upcoming tax dates. Then place those dates into a 13-week cash flow view. Can the business pay current tax as it falls due? Can arrears payments be made without missing wages or critical suppliers? What happens if a key customer pays 2 weeks late? Which week goes negative? That view helps separate three situations. First, a visibility problem. The numbers are messy, but the business may need a clearer forecast, KPI review and cash flow discipline. Second, a business debt problem. HMRC pressure, creditor demands, guarantee exposure or payroll risk are live and the director needs structured professional input. Third, an urgent problem, enforcement. A petition threat, a formal deadline, a safety issue or a payroll crisis means the director should speak to a suitable professional quickly. DebtDecoded can help you prepare, understand the pressure points and organise the questions. It does not negotiate with HMRC, provide tax advice, act as your representative, provide legal advice, regulated debt advice or insolvency advice, or recommend an option for your circumstances. If the issue is visibility, start with Business Decoded. If HMRC action, creditor threats, guarantees or insolvency concerns are live, move into the business debt route and speak to a suitable professional. If you need more information, guidance and tools, visit www.debtdecoded.co.uk.